How's it going, everybody? I hope you're all doing well. In this video, I'm going to show you my dividend income for the month of March in 2023. For those of you that don't know, I've been tracking my portfolio for close to 3 years now. Every month, I like to give an update of where I'm at in terms of dividend income. This is a long-term portfolio that I'm looking to grow. Definitely more conservative, a little boring, but I do like to track the progress month over month. Hopefully I can look back on it someday and see the growth, but also I want to inspire others to start their own investing journey as well, because it is one path to financial freedom, and that is something that I'm very passionate about. So with that being said, right now the portfolio is valued at $29,100, which puts us at a rough gain of $5,200, or a return of 34%. Now, the last month has been really interesting in terms of events that happened within the financial industry, but in terms of this portfolio, there really hasn't been too much action, as you can tell with a return of 0.00%. In early March, there was a pretty steep decline in the market, primarily due to the banking crisis with Silicon Valley Bank, who essentially had to shut their doors because they could not pay back customer deposits. And then in concurrent with that, you had the closing of Signature Bank and Silvergate Bank. So with all of that going on, it caused a massive panic within a market. A lot of people thought there was going to be a bank run, that all your regional banks were at risk. But then the market picked back up slightly and had a nice little run here at the end of March. And then just looking at some of the stocks that got hit pretty hard, if we go into the finance pie for this month, you can see there's some pretty large downtrends here, especially with Ally Financial. This is one stock where I actually trimmed my position as this news was sort of unfolding. I took a lot of money out of Ally and stuck it into an ETF like VTI. And in terms of bank stocks going forward, I'm probably going to focus on the bigger guys like JP Morgan and stay away from more of the smaller banks. Because I think at the end of the day, while the FDIC might back the people who actually have money in the bank, it's normally the shareholders who get crushed. And with your smaller banks, the volatility is much stronger. But overall, finance took a beating this month. Industrials took a beating as well. You can see Caterpillar down almost 18%. And then some signs of strength. Well, we actually had tech rebound a little bit, which is nice to see since they got absolutely decimated over the last year or so. Microsoft had a nice increase of 13%, Asana about 12%. And then heading into healthcare, that did quite nice as well. You got a company like Eli Lilly up about 15%. Which really shows just how important diversification is. If you invest in different companies in different sectors, you have less risk of getting destroyed. All right, so with that said, let's hop into the dividends here and roll through that quickly. So starting off the month, we got hit in the face with a nice $11.78 dividend from Aflac. Certainly nice to see. I remember when I first started this portfolio, I would get dividends of $1 and $2. So to see a double-digit dividend come in, it honestly just feels really nice. And I can't wait till we get triple digits. Anyways, after that is Johnson & Johnson, $5.87. Microsoft comes in next at $1.57. Again, Microsoft is a high growth company that pays a lower dividend yield, but overall a company that has a nice moat and one that I'm very comfortable investing in. Oil company ExxonMobil is next at $3.40, followed up by Eli Lilly at $2.09. And these two companies here have the highest return in my portfolio. I invested in them back in 2020, sort of when the COVID pandemic first started, and they got crushed back then. And I think I sort of invested in the bottom because right now the returns are well over 100%. So if you invested in these guys around early 2020, you're probably sitting pretty well right now. $3.96 came in from 3M. Realty Income Corp, which is a monthly paying REIT, brought in $6.06. Similar to that is Stag Industrial, another monthly paying REIT with a focus on industrial properties as opposed to commercial properties, but they brought in $2.65. Consolidated Edison is next. This is a utility company. 91 cents is what they brought in. Everyone's favorite fast food chain and Character, Ronald McDonald, paid a handsome $3.06. Following that was BlackRock at $7.71. And then one of my favorite stores where I actually spend a lot of time at, Home Depot, they paid out $4.21 for this month. And we get into some ETFs here. VYM, this is Vanguard's high dividend yielding ETF. $7.86 is what they got. SPHD monthly paying ETF brought in $7.42. Waste Management $2.14, and then VTI $9.69. Again, I sold out of Ally Bank and stuck my money into this ETF here to sort of de-risk my portfolio a bit. And then technology company Broadcom, they brought in $5.97. And then to round everything off, we got $6.20 from Brookfield Infrastructure Partners. So when we add everything up for this month, the total dividend income comes to $92.54. Last year we got $70.03, so roughly a $20 increase there. And just going back a few years, you can see the progress, so that is really nice to see. And I added this little feature down here that just calculates the yearly wage, the monthly, weekly, and hourly wage from this portfolio. So right now we're making roughly 41 cents every single hour. Anyway, that is going to wrap up this video. Thank you all so much for taking the time to check it out. Comment down below how much you received in dividend payments this month. I'm always interested to see what other people get as well. And consider hitting that like and subscribe button if you enjoyed this video. Until next time, take it easy.